Well, Barclays Wealth recently released a report attempting to document the attitudes and insights of entrepreneurs and investors from around the world, entitled "If at First You Don't Succeed, Mapping Global Attitudes to Adversity," and describes how different cultures value traits such as optimism and persistence. Here to explain how this fits into a view of the investment landscape is Philip Bradford. So take us through the rationale here.
Well, it's a very interesting study. I find these kinds of studies very important because essentially what we're doing is we're surveying high net worth individuals. So these are people that have got a minimum of 15 million rands equivalent investable assets. That's the 90% of the survey, and then 10% of the survey, so in other words 200 of the 2,000 in total, we're looking at 150 million rands and more. So these are people that typically run businesses that make economic decisions. And it was very, very interesting to see a couple of things that were contrary to, I'd say, conventional wisdom, particularly the emerging markets, particularly Asia and the Middle East, started showing up very strong entrepreneurial attitudes. The majority of the participants in the survey from those parts of the world actually tend to be entrepreneurs. And where, contrary to what we would have assumed, is actually America hasn't shown up to be that entrepreneurial. In fact, very similar to that of the Europeans. And the people that tend to be less entrepreneurial tend to be less optimistic and tend to respond less positively to adversity.
Philip, is this not a function of the times? First of all, I note the name of the report. It just strikes me as a kind of the right, very sort of reflective of the sentiment in the market at this point. You know, it's tough times, we've got to persist, and it's about that. But I know you guys have been doing this for some time, and I'd be interested to see if this is something that changes as a country develops. And now we have this new energy in the emerging markets, in China, in India, in Africa, and people now are excited about their prospects, perhaps in the same way that Americans were 50 years ago. Is it not a function?
But because entrepreneurs were the lifeblood of
the American economy.
That's an excellent question. You know, which came first, the chicken or the egg? I think, yeah. And I think there is a function of the environment is driving those sort of attitudes. Optimism is something that can be fleeting. You know, we measure business confidence surveys, and all of these things are very, very important. But let's be honest, doing business in a lot of those emerging markets is hard. It's easier doing business in America, but people, I think, as the economies become more mature, as you say, over the last 50 odd years, it's a lot easier now to be wealthy and be employed, as opposed to employing and running a business. And so that's what you find out of the developed market countries at the moment. So it is a potentially a vicious circle where you can be wealthy, you can be comfortable, you can actually be pessimistic and still make money.
But there's another trend that's going to happen, because in the developed world, as more and more people lose jobs, that forces a culture of entrepreneurship. You've got no choice. You've got to start thinking of some business to survive. So we're probably going to see a complete turnaround in those environments.
Well, hopefully. The question is, how quickly will that happen? And for now, what we are definitely seeing out of the Asian markets in particular, and the Middle East came up as a big surprise for me. Incredibly positive. They actually see failure as a positive. And I think that's important, is that failure can't be avoided totally. The whole point about businesses and management is you're supposed to put structures in place to try and avoid losses. That's what, as investment managers, that's what we do. We're trying to control risk, but you can't avoid it. If a stock market crash or a financial crisis comes your way, it's more about how you respond to that. And similar as an investor, as an example, we all know that optimism can work against you. But if you've got optimism and perseverance, it shows up. Not only do the people bounce back better, they tend to be wealthier as well. So the people that are more optimistic in the survey and tend to show more perseverance in their character actually are wealthier. They have higher incomes, and their overall net worth is higher as well.
You identified the Middle East and Asia as the two hotspots for positive entrepreneurial attitudes. How does South Africa stack up in this study?
And this is what I enjoy about this kind of thing, where we can actually compare South African wealthy people to the foreigners. We had 50 South Africans in this survey, a mix across the ultra high net worth and the high net worth. South Africans came out as actually very positive in one or two characteristics in particular. They attribute a lot of their success to hard work and skill. And very little to business connections, I suppose, which is contrary to what you often read in the press. But I think someone who's run their own business knows that. It's different if you've made money through other means. And that came out very, very positively. I think where South Africans actually fell behind the other emerging markets, particularly the Asians, was they don't respond as well to adversity. they almost see they don't bounce back as well. So most of the Asian type participants and Middle Eastern participants, they felt that if they failed, they should persist and they should ride it through, and the business will come through on the other side. They were very strongly in that favor, where someone like the Americans and the Europeans were actually quite negative in that sense.
Philip, you've mentioned the positive attitudes and this resilience and the determination to bounce back as being very positive for entrepreneurs. You and I have both dealt with entrepreneurs in our careers where you're managing a lot of money for these types of people. What's the trick with them as they become investors and they've successfully achieved what they needed to in business? Is that optimism and that never say die attitude a negative when they start thinking about how to manage their own money?
Definitely. You know, in economic speak, you've got a diminishing marginal returns from optimism. It definitely helps you up to a certain point, and that is probably what that's the human spirit. You know, that's what made the humans take on the mammoths and the saber-toothed tigers when they shouldn't have won. So optimism is definitely a positive up to a point, but optimism can become a negative if you place too much emphasis on your own skill. And you believe that it was all you that made this happen, because sometimes luck does come your way as well. So you need to moderate that optimism, and particularly as an entrepreneur starts becoming a passive investor into a market where, at the end of the day, whether I'm optimistic or not, it's not going to make the stock market go up.
Let's bring it now to the stock market. We've got a couple of minutes left of the show, and how are you feeling about the equity environment in the local space right now?
Well, the local market has been a tough space. You know, we sat here a couple of months ago where we were saying, I was particularly saying that, yes, certain areas of the market are overvalued, but they're probably likely to actually continue to see the earnings growth coming through some of the overvalued area of the markets, particularly the industrials and the retailers. And the resources, as much as they're a long-term buyer, we've actually seen resources get more expensive by their earnings falling, not by their prices going up. So we're still in a situation now where we've got to watch earnings growth quite closely. The market is overvalued in pockets, but you could argue that there is still value to be had in our market. So the local market, we've got a neutral kind of view. In other words, we're still relatively positive because there's a global headwind favoring us. As a global investor, we look at what the attitudes of my global investment team are still positive on emerging markets, very positive on developed market equities. We're relatively positive on the US outcome. We think that they'll come to some kind of solution from a fiscal cliff perspective, and we're starting to see some good data coming out of the US now. You look at some of the housing start, the housing resale data. These are the kinds of things that can be a surprise to the upside. So I think equities globally as an investor, if you're looking at them, that's your best risk-adjusted play from here on out. There's no doubt that is mispriced relative to its long-term pricing. And from a global investor as well, they're also looking at emerging market bonds. South African bonds, as an example, are actually well priced relative to a lot of its peers out there. And as long as you understand that those foreigners are likely to push capital our way in a low interest rate environment, that's likely to support our property and our bond markets going forward. So actually, there's nothing ultra positive about our local market, but I think if you're in a portfolio right now, there's definitely no need to panic. And I've spoken to a lot of clients who are worried about a pullback, but actually we see if there is a pullback, and we're likely to see some volatility, I think, going into particularly the end of the year with the American market and the European issues that they're struggling with as well. But any kind of pullback, any kind of excess volatility, we've seen it as an opportunity to enter risk.